Okay, well, you know who I am. So a lot of noise about now to move fast. There's been quite a lot of information in the market for us all to read. Gartner produced something earlier this year in terms of focus. We did our own survey. Less than 10% of organizations claim not to have an open banking strategy. That's Europe-wide, not just UK. That picks up PSD too. So interest, I think those of us who work at larger institutions and know interest is not the same thing as action, but there's definitely an interest. We also have some very interesting information as to the volume of the market. I think this is a bit more interesting simply because I don't know how people really understand and calculate these numbers. I put them up there because I think they show a desire from part of the Open Banking Forum and also from other organizations that there is a large community potential for using open banking services. And we've seen in the market, again, the likes of HSBC, Medibank, Yolt, and of course Starling, who have all entered the market and are opening up the market through open banking services at this time. Globally, that's really exploded. We've even had the United States now looking at open banking regulation for the first time. BBVA have already in there, of course, because they announced only 2 weeks ago they've got an open banking marketplace in place in the United States as a result of Compass Bank, way ahead of any legislative requirements. And I think that's part of a theme that we're going to be developing in this little talk between regulatory requirement and actual opportunity and the speed at which organizations are moving. The regulatory requirements are minimal entry stakes, and we've heard that theme already mentioned this morning on the main stage and in this room. However, and there's always a however with respect to open banking opportunity, the momentum is actually painfully slow. So we've got a lot of hype, a lot of opportunity, but the reality is, according to the open banking implementation entity, 6 TPPs are live with customers as of the end of September. That might have improved since, but from September it was 6. There are apparently 25 APSPs, that's banks of one form or another, who have got open access through the open banking APIs. However, we only know of 9 of them publicly, and that's the 9, all very Tolkien, isn't it? However, what we see then is that there are 77 entities who are currently registered or available to use open banking. There are 52 TPPs and 25 APSPs who are looking at it, but only 6 of the TPPs are using in live customer engagement as of end of September. So, conclusion 1, market adoption is sluggish. I think we all know that open banking entered with a whimper, not a bang. But what we're going to be talking about through the rest of this discussion is where the opportunities really lie for us. And I think what's more interesting, some of the discussions that seem to be so totally obsessed with customer experience as the API environment and value lies, is actually looking at how APIs and open banking in more general and open APIs more generally could potentially massively undermine existing banking cost structures. Example 1, that there are third parties today that will offer current accounts to be run at 10% of a standard tier 1 bank's cost to run a current account. That's 10% of the cost. Highly automated. Yes, they're going to be quite vanilla, so that all of the cool stuff about an insurance policy you never work out how to use won't be available to you probably. But the fact of the matter is that's 10% of the cost. For me, and the clients I work with, this is just as interesting as whether I can aggregate each scorecard onto my phone app. In fact, more important, because if I can reduce my costs as we enter 2019, and this is the year, as Forrester reported earlier, of cost efficiencies for 2019, that's going to be the only program in town for most banks. If I can cut my current account cost base in anything like those sorts of numbers some of these third parties are offering, that's something I have to take very, very seriously. Faster payments, we had Starling on here earlier on, they have faster payments capabilities, you know. Some of the tier 1 banks' payments, they're measured in pounds per transaction. Some of the faster payment services available through APIs are measured in pence per transaction. Again, maybe we're all looking too much at the wrong place, because we all know it's easy to buy a screen that looks pretty because we can interact with it. But the underpinnings and the plumbings of our banking environment, where some of the real savings and the real impact are going to take place in an open banking environment. So what, very briefly, we have in terms of consideration is, and this is where it's going to get interesting for all of us who are in financial services, is from being a traditional bank, moving and evolving my own thinking as an organization through open banking API, more modular banking. We heard some references to banking as a service from Starling and Megan before. There's many more banking as a service opportunities out there. And again, as I say, if I can run some of my services, I shouldn't be having conversations like I had recently with a tier one bank where they were going to spend several millions of pounds to reduce their payments capabilities to, I think it was something like 50 pence a transaction. Or they can go to a third-party API and for the same effective service, do it for, say, 13 pence a transaction. And this is the debate that open banking is really open to us. Of course, this is open banking, small o, small p, not the regulatory changes that have heralded some of this. And banking as a platform, we know, like Fedor, the ultimate endpoint for all of these services that we heard references of before, the ultimate endpoint is that my banking experience is an aggregation of APIs. So the API store that arises, the customer base that I actually plug into through multiple marketplaces, etc. It's fundamentally changing banking. It's not just about the regulatory compliance. It's not just about whether I can work out how to use the open banking payments initiative in a creative way. It's actually about whether I can drive insight from the transactions, because all those things are true and they're given. It's actually about what does this do for the cost base, because the cost base, and we heard the references earlier on about market, the cost base drives my ability to invest, my ability to innovate, and my ability to compete on price. And whether we like it or not, for our customers in financial services, what they really want is more for their money. And that can only be driven if I have a lower cost base to provide it. So in terms of open banking business models that we see emerging, I think the ones that are most interesting for us, I think the rise of the API store is quite interesting. So we all are familiar with our app store. The rise of the API store, where we'll be able to go and aggregate a whole range of information, services, capabilities, and that will allow me as a financial service provider to expose services as well as consume them if I'm wanting to create a bank from scratch and create those services and aggregate those services. I think banking as a service is very interesting from two perspectives. The likes of Fedor, you're able to use their kind of capabilities to create a customer experience. So Fedor operates on the custom orchestration API level. So they are providing a sort of Amazon for banking platform, which is managing customer expectation and order taking. And then you have other service providers like the likes of EasyBob who provide highly automated core banking services. In EasyBob's case, I think they do financial, asset finance and current accounts, for example. So there's a lot of opportunity there. We know that Starling Bank provides us the ability to consume faster payments at a price point that frankly undermines the reality of having a payments provider in most banks in the UK of their own at this point in time. But if I'm an incumbent and there's still very slow adoption around open banking, there's still very little understanding from those customers that open banking is something they need or want, because that's not what they're going to be buying. No customer is going to say, I want me some open banking regulation. They're going to ask for a more cost-effective product. They're going to ask for something that is more intuitive to their lifestyle and their requirements. If I'm a bank today, the things I have to think about are well, there's many things, but most important of all, consent and security is one of the lags for tier one banks today and incumbent banks today in adopting open banking services. There is a lot of concern that sharing of data is going to be the next insurance mispayment problem. So therefore, many institutions are considering how they track and monitor and measure the data that they've shared so that they will always be able to show exactly what they did with their data. That's a cost that nobody kind of thought about in the world of open banking, but it's a cost that is very real to most banks who are significantly concerned with risk. Significant investments around data and the insight that data does drive. Right now, pretty much every bank that I know of in the UK is looking at how they get metadata from transaction data, which is a prerequisite to show aggregated data, the likes of Monzo, the stuff that mBank was doing 4 years ago, which is a Polish bank, by the way. They had all this enriched data some time ago. CheBanca in Italy as well, ING in Spain. Monzo has come to the market in the UK. We all know about it, but it's by no means the first bank to show insight-driven data from transaction feeds. And then, the bank as a custodian of a customer's data, the relationship and the regulatory framework in which that operates today, frankly speaking, it's not necessarily 100% clear in every single scenario who's going to be responsible. So the delay and the concern for most of the tier one banks is wrapped in the risk and the regulatory concerns of the data flow. And that's a very real concern because, as we all know, journalists do love a good, bad bank story, right? So overall, where we're heading towards is that the key drivers for any bank are always about regulation. Right now, we're in the eye of the Me Too storm. What do I mean by that? Aggregated data, single customer view, these sorts of things which everybody's saying are so impressive and new, but they're not, but they're new to this market. And then thirdly, differentiation. Differentiation in what sense? Well, it's how I'm going to consume the services that are available to me through these open API services. There's another organization called ShieldPay, great stuff with escrow payments. So in the SME banking environment, I can actually manage escrow payments in new and innovative ways that help small medium enterprises manage payments to in and out of their organization. So where we look for value isn't necessarily, the pretty screen and lots of aggregated data. The value is in the process and the cost base. And increasingly, while value and monetization of data has always been about how do I understand data from a transaction point of view, the metadata around that transaction point of view, people are beginning to wake up to the fact that the cost base is phenomenally important. The run the bank, change the bank, the twin jaws of revenue and cost are alive and well, and those banks who've got the incumbent customer base at this time are focused very much initially on the value monetization, the Me Too, but the attention is moving very, very swiftly around to the cost base. And that will mean much more cloud adoption. It will mean much more compute power through the cloud, etc. It will mean significant investment around the whole mainframe offloading. Single point of challenge for most core banking institutions is mainframe offloading. The data, the bottlenecks between that a mainframe provides to most tier one banks and trying to hack that data in a near real-time way has been problematic. How they manage big data, not just from the point of view of having operational data stores that can be accessed from multiple sources, but also how those operational data stores are self-serving. There is an institution I won't name, has over 6,000 people whose main purpose in life is to improve the quality of data inside their institution. So when these things become real and operational data stores are fully implemented and they are self-service, there are, again, very significant cost reduction plays for larger institutions. In summary, for me, and we've moved through this quite a pace, I appreciate, there's really a twin track approach here. So when we talk about open banking is digitalization. Open banking is not regulatory compliance. If you're working in an organization that only talks about regulatory compliance, you need to kind of educate some people, and probably quite quickly, because it's not just about regulatory compliance. The budgets will have been set for regulatory compliance purposes, I guarantee that, but the reality is open banking is about manifestly changing through your organization structures how agile you are. We are here in enterprise environment today all about agility, open banking is about transforming your organization so that you're able to consume information near real time. You can drive insight near real time. You've reduced the cost base. You've embraced all of the things we know about already, I expect most people in this room, around thinking about data engineering, around DevOps. You know, we work with clients that used to do 1 or 2 releases a year. They do 50 releases a day now. And the manifest difference and changes that makes to how they roll out change and innovation for their customer base and the cost base, and how they reduce failover and fault is pretty impressive. We know we're going to have to invest more in artificial intelligence and machine learning capabilities, because we know we're going to have to take this information and we're going to have to use this information in new and innovative ways for our customers. But the business value side of this isn't just about delighting customers. It's also about reducing the cost base. I keep coming back to this, but it's fundamentally important. The cost base of most banks in the UK is significantly higher than technology that we're in today will need it to be in the next couple of years. And at that point, when the cost base is driven, when I reduce 50, 60% of the cost of running a current account or more, when I cut my my personal lending book costs by 80%, when I actually am able to do these things, can we all consider, when we talk about the amount of money that these banks do deploy, what that means for innovators in this marketplace? Either there's going to be a shopping spree, and I'm sure there will be, and the banks will be able to turn around. So the question you will need to ask is, as innovators, am I on the right side of this innovation game? Do I think I'm going to get to a place where I need to be before the banks have unlocked the value that new technology is going to allow them to have in terms of reducing their cost base? And it's serious for most of these banks. They're not messing about when they are engaging this. The speed, I don't know. If I had a crystal ball, I wouldn't be here, right? I'd be in LA or somewhere. But the point is, the cost reduction opportunities we can't underestimate, because they are going to drive significantly these new open business models. I don't think necessarily we're going to see many tier 1 banks offering large amounts of banks as service necessarily, maybe, but because they won't need to, because others get there. They may well acquire organizations who've already got there before them. And if we look at some of those organizations, they started out as banks, they then handed back in their banking licenses, and now they're just providing services to the banking industry. That's a very interesting place for us all to play. Now, last but not least, all is not lost in terms of the mountain that organizations need to climb. So ultimately and fundamentally, the message here is about compression. So where I'm introducing new technology, whether it's operational data store, a function, or an API governance, an API business model, what do I need to do is think about how I align that investment for my organization against, we call it customer journeys, it could be specific strategic projects, call it what you will. The intent and the idea is about using the principles of agile business. We create MVP spikes of reusable components. Those reusable components are then brought into each customer journey. The first customer journeys are always the most expensive because they have to pay for more normally. And if you're a bigger institution, most of your funding will come from the P&L of the businesses. It won't come from the technology department. Technology departments have run the bank budgets mostly, and only small seed investment budgets. That could be about to change to a certain extent, but historically, P&Ls are owned by businesses. So what you need to do is you not only need to create this architecture, you need to also sell the hell out of that architecture to P&L business and risk-averse individuals. But through compression, you move the organization and its components using the customer journeys as your main driver to align the business change with the technology change. And this is what the journey that banks are on to a lesser or greater extent at this time. Okay, that was my romp through the world of open banking. But I'm happy to take questions if anybody has any.
Large banks we currently have in play, do you see any that are really
Well, I'm not going to name the ones who are behind, but I will say the ones that are going really are doing very well. I think we've probably already heard this in several conferences already, but BBVA have done extraordinarily well. Why have they done extraordinarily well? Well, they started their journey of open banking maybe 6-7 years ago when they were working out how to reduce their mainframe load. And they wrapped the crap basically on their mainframe and looked at how they could export data and offload data from the mainframe. That gave them a head start, frankly, in understanding how they could actually exploit APIs and APIs as product within their business. So BBVA have done very well. They've also introduced and shown how, from the other side of the sphere, how they integrate. So the Valora app, which is a mortgage house buying app available to anybody in Spain, part of the customer journey. They've done some work on private wealth, which is particularly interesting. And of course, as I said at the start, they've announced that they've got their open banking capabilities fully up and running and available to the US market through Compass Bank.
Hey, Christian. I suppose we're in a little bit of a bubble in the south, and I suppose in the major cities we're all kind of embracing this technology. If you do ask people outside of London what's Monzo, what's Nutmeg, and so on, but do you think there's the technology is obviously moving greatly and it's benefiting the people that are the early adopters, but is there a cultural shift that's going to be required sort of more widely across the UK, say, to sort of embrace this technology, idea of open banking, sharing your information with another bank and so on? Do you guys have any views on that?
It's a very good question. I think my view twofold. One, touching on innovative fintech organisations. I go back to a statement I made a little while ago, twin jaws, cost and revenue. I don't suspect that we'll see quite so many in the next 2-3 years as we see today, whether they are acquired or they merge or something less pleasant happens to them, because you do have to make money eventually. There's only so much future investment that you can actually gain. So statement number one, I'm not totally convinced that we'll see a very large number of current fintech family lasting 3-4 years hence in their current form. In terms of customer adoption, I think customer adoption comes through their experience through the handsets and what they use. I think we heard Megan say at Starling Bank, people are using it to split bills. I mean, it's those incremental steps that introduce innovation from a customer perspective. But there's an old comedy, Yes, Prime Minister, and they talk about running a questionnaire in this scene, and it's about how you ask the question, basically, fundamentally. So if you ask the question of a customer, can I take your customer data so I can make more money as your bank, then the answer will probably be no. But if you say, can I work with you to improve the cost effectiveness of your small business, or I can improve your cash flow, the answer may be, well, I'll give it a go. So I think it's the pitch and the tone. I am a little bit nervous about the first big data breach in our new open banking world, I'll be honest with you. There will be one, because there is always a data breach. The question is who and where and how that gets resolved. But I don't think customers need to be sold open banking as a thing. They need to be sold better banking in terms of the customer experience. And what open APIs and the open banking environment is driving is potentially massive reduction in cost for banks to provide services, which can only be a net good, one would hope, for customers in terms of the shift back to price point and service for the customer base.
Can I just ask you a question about Asia? Because if I look at the development of financial services in Asia, then you see the Alibabas and the Tencents dominating by essentially, I think, surrounding banks. Isn't there a danger that while the banks are doing all this, they're going to wake up one morning and they're going to be completely surrounded by somebody else, pending their ability to negotiate our compliance?
Yes. I think it's about the speed. I mean, we can all kind of speculate that speed. We haven't seen the Gaffer Bank move, and the main reason often cited why we haven't is that who'd want to enjoy the regulatory hell that is financial services. So staying outside of that is actually not a bad place to be as a provider. I think if you look at Asia, we're still seeing some common threads in terms of how banks operate. I mean, Alibaba, there's a wonderful YouTube piece on Alibaba, the new retail bank, new retail it's called. So I'd encourage you all to go and look up new retail. It's a fabulous merge of clicks and mortar in terms of how they operate. I think that there's a danger that banks can be disintermediated. I think the reality is, given the customer base's stubborn refusal to embrace this change, I won't name them, but some of our fintech darlings have got very large numbers of accounts, and very small numbers of them have actually money in them. So there's a lot to be said for time. I think banks are beginning to wake up. Some I know are embracing this cultural change, which embraces, and culture is fundamentally important, of course. As we heard in the speech at the beginning of today, the cultural change that banks need to go through in terms of shifting, not shifting from risk, but shifting to a wider set of priorities. It's happening in some institutions, and we see some banks doing that. Others are still stuck in the hell that is the mainframe computing, and how do I get out of that, and turkeys don't vote for Christmas, and all the other stuff that stops a big incumbent being agile at the moment.